My name is James Porter, and I'm joined today by Jamie Brubaker and Stephen Caldwell here at Toron AMI. A warm welcome to Toron AMI clients and friends joining us today for our call. Well, many of you may still be paying for gifts this season with your trusty Visa card. We are grateful that you're nonetheless participating for Christmas call today. We're taking on a fun topic today that has been in the news a lot lately. While the topic may be lighter in some ways than our last call on economics and markets, we wanted to share with you some of our own learnings and provide some insight into the way that we do research here at Toron AMI. Most importantly, we hope you'll come away from the call being just a little better equipped and more knowledgeable than your colleagues, friends, and family for those holiday season parties where the topic may just turn to Bitcoin.
Speaking today will be Stephen Caldwell. Stephen joined Toron AMI in 2010 with roughly 20 years of cumulative experience in investment analysis, portfolio management, client service, and sales, both here in Canada and in the United Kingdom. Stephen is part of our Canadian equity team, focused on the technology and industrial sectors. Stephen has developed a deep curiosity about Bitcoin and some of the investing implications it may be. So without further ado, and fresh from his BNN appearance this morning, let's pass the call over and begin.
Hi everyone. I think what might be useful is, before we start talking about Bitcoin itself, let's address why it's important for us as investment managers to look at these new developments as they come along, even if their ultimate fate is still uncertain. History's shown that markets can often underestimate the longer-term potential risks and opportunities faced by companies whose business models are eventually impacted. Here are 4 examples of famous last words, and there are many more littered through financial history. My favorite one is the president of the Michigan Savings Bank who thought the automobile would never replace the horse. I can just imagine him checking the Wall Street Journal every morning and his monocle popping out when he sees that his shares in the Buggy Whip Corporation of America just continue to fall. Management often display a preference for trying to maintain the status quo. But this failure to adapt can be harmful to the company's revenues and earnings potential and can even lead to financial failure. I mean, an excellent example is even Kodak. If you think about it, this company at one stage was one of the most iconic brands in the world. And when digital photography emerged as a threat, the company basically refused to leverage that brand to become the leader in the new digital technology. They were just too concerned about the prospect of cannibalizing their existing lucrative film business. Now, eventually, the company faced up to what was happening. They put together a digital strategy, but it was just too late. Their brand and value had eroded, and the company actually eventually went bankrupt in January of 2012. Now, what makes this case all the sadder, I think, is that actually it was the Kodak engineer in the mid-70s that actually created the first digital camera prototype. Now, although, hindsight is a great analytical tool, and all of those previous quotes sound knuckleheaded in the light of what we know today. But I'm sure all of those guys, they had good reason to believe what they believed at the time. They basically just underestimated the power of innovation to overcome what they saw as barriers to adoption of new technology. Now, as we're going to see as we progress through the call, is that Bitcoin's core value proposition is the prospect to offer a new method to transfer funds quickly and a negligible cost party A to party B, without the need for a third-party intermediary. So this could potentially at some stage be a threat to the current fee-based business models of companies such as Western Union. So for us, by familiarizing ourselves with the potential impact of such technology before they're picked up by the broader investment community, we can get ahead in terms of appraising the risks and opportunities faced by the various companies in our investment universe and better question company management to assess their preparedness to adapt. Now, we're talking about Bitcoin today because it's interesting and it's topical, but really the same principle apply to any other new technology such as cloud computing. Now, obviously, the Bitcoin concept is still in its early days, and it could easily fizzle out, but at the same time, it does offer what I think is a valid utility to users, regardless of the value of Bitcoin day to day, which most commentary focuses on. And also, I think it's important to bear in mind that a lot of the practical objections that are valid, but the way to think about those they're similar to those encountered by any other new technology, and they can be addressed over. I mean, the internet all through the 1980s was basically the presence of computer science departments. And it wasn't until companies like Netscape and AOL came along in the mid-90s that it opened up to the average consumer. An interesting tidbit, this is always pretty amusing, I think. Bitcoin basically emerged in 2009. The original code was written by a programmer, a group of programmers working under the pseudonym Satoshi Nakamoto. Nobody really knows who was actually behind it, and the general understanding is that by 2010, the initial programmers had dropped out of the picture, and work since then has been ceded to a wider group of independent programmers.
So, Stephen, I enjoyed the look back at how technology has impacted some companies over time. But how do you think investors should think about Bitcoin today?
Good question, and I think there are two. Instead of getting bogged down in the exact mechanisms that work, I think there are two key takeaways to focus on about Bitcoin. First is, and this is in my mind the most important. This is really the key to the concept and what's going to drive its adoption over time. Basically, it provides a network that enables financial transactions to be carried out between two individuals or an individual and a company anywhere in the world that are anonymous, secure, virtually instantaneous, and over and above all, free. The way the network functions means it doesn't require me to know or have faith in the person I'm dealing with. The transaction will only settle if the person paying in Bitcoins has good title to those Bitcoins. And as such, it basically does away with the need for a financial institution to stand in the middle and intermediate a transaction. So this is a pretty staggering number, I think. According to the World Bank, the average cost of person-to-person money transfers around the world in 2012 was 9.6%. So you can see our definite economic incentive to use Bitcoin network to wire money home over, say, Western Union. Likewise, for a small online vendor, accepting payment in Bitcoins removes the shackles of having to subscribe to and pay on 2% or so of all transactions to one of the credit card networks. The anonymity offered by the Bitcoin payment, well, it does make it attractive for illicit users, but I also think it offers a more mainstream appeal. I mean, I'm always reluctant to use my credit card online with anyone other than the most established companies due to concerns of card fraud. Additionally, something to think about, credit card companies have a complete history of where you spend your money and broadly what you spend it on. And they're restricted in what they can do. They can't sell that on to third parties, but still, some people don't like that transparency into their day-to-day lives. Some people don't care, some people do.
Now, the second part, but actually, I don't think it's as important, but it gets most of the media commentary, is that instead of transacting in an established currency such as dollars, all transactions take place in the form of Bitcoin. And the way the Bitcoin money supply works is kind of interesting because there are 12 million of them in issuance. That'll rise at a rate of 2% a year to 21 million into 2040, and then zero growth going forward. And a lot of people like this feature because they see this lack of a central bank that can issue at discretion, giving Bitcoin some sort of hard money characteristics that attracts similar investors to precious metals and so forth. But the ironic thing is, I mean, at the end of the time, Bitcoin is as intangible as intangible can be. It's a virtual currency that only exists as a string of ones and zeros on a computer's hard drive. One other point is that although there's going to be ultimately 21 million maximum, it's divisible to units of 100 millionth of a Bitcoin, so you can transact in a fraction of a coin. So we think, a lot of the current companies overly focus on Bitcoin per se and whether that's going to become a dollar killer somewhere down the line, and it isn't really considering the wider benefits that the Bitcoin methodology, if you will, offers as a facilitator of fast and cost-effective financial transactions. We don't see why the two concepts need to be associated at all. It seems to us that the encryption methods used to securely transfer Bitcoins couldn't be used to securely transfer dollars. Indeed, a couple of days ago, the Financial Times had a story about JP Morgan having filed a patent for a Bitcoin-style payment system using a similar underlying methodology, presumably transacting in conventional currency.
So, Stephen, what is the biggest misconception in the media about Bitcoin?
Well, the quote we started off with, it suggests people can often underestimate the long-term significance of development, but at the same time they can overestimate the short-term impact, and I think that's kind of the case here. I mean, this is a 12-month chart of the price of Bitcoin. It started January 1st at $13. It accelerated at the beginning of November and reached $1,000, then it virtually got cut in half when the Chinese started talking about restricting banks' ability to make markets in these coins. And then it's rebounded back up to about $1,800 or so. So, you know, it is a phenomenally volatile thing. I think that's going to be a deterrent to people actually adopting it.
So Stephen, if there's this idea that Bitcoin could become money, it begs the question then, what makes money money?
Yeah, that's a good question, James. And let's just go back to the sort of basic fundamental definition of money, and let's think about how Bitcoins actually fit into that framework. So the first thing is money's got to act as a medium of exchange. Under a barter system, if I have something, Jamie has to have something that we both want to exchange. There's no simple medium. If I have something, he doesn't have anything I want to trade with, then no trade's going to happen. So basically, we're talking here about universal acceptability of money to let transactions happen. I mean, here, unfortunately, Bitcoin doesn't currently score that well, but it is getting better. I mean, it's still really only niche businesses that will accept Bitcoin. Things like online electronic retailers whose customers are the computer literate types who are likely to be early Bitcoin adopters. And then some trendy bars and restaurants who use it basically as a status symbol that they're up with the times. Now, there was an interesting experiment that a Forbes journalist tried to carry out, and she actually managed to last a week spending only Bitcoin. But to be fair, she did admittedly have to fudge it by getting a week's grace on her rent from her landlord. And she had the advantage of living in tech-savvy San Francisco, so I think it's pretty safe to assume that her experiment wouldn't have worked so well in, say, Shermer, Illinois. That said, the number of participating vendors is growing pretty rapidly, and as noted, there's an incentive for companies to offer it as a service. It's going to reduce costs to their business. Also, the fact that it is an open source system and will evolve over time is facilitating innovations that I referred to previously that can help adoption. For example, if you've got an Android or an iPhone, you can get a little app that enables your smartphone to scan a QR code at a retailer and then automatically pay your bill in Bitcoin. So that makes it transactions much more user-friendly. Second point, store of value. Here again, it's hard for Bitcoin to score many or even any points. I mean, just think back to that price chart. But this property requires the purchasing power of a currency to remain stable over time. So people need to have confidence that their money will have basically the same purchasing power in the future, so they don't need to spend it today. They know that they can buy a similar basket of goods at some stage in the future. Now, you think about it, I mean, Bitcoin's gone from $13 on January the 1st, $208 on November the 1st, and then a recent 1,000. That's certainly not the case here. I mean, if you lived in Bitcoin land, you'd basically be experiencing what could only be described as hyperdeflation. For example, a $700 iPhone would have cost 54 Bitcoins in January, but now it costs only 0.7 Bitcoin. I know authors talked in the past about, on previous calls, about the economic impact of deflation. And one of the most commonly identified adverse side effects is that people hoard money in the hope of being better able to buy at a lower price tomorrow. And something analogous is happening with Bitcoin. Basically, 60 or 70 to 12 million Bitcoins are being hoarded in anticipation of higher prices in the future. And by that supply not being on the market, that makes the available float for people to buy and sell that much smaller, so that contributes to the underlying volatility of the coins themselves. I mean, the third, final one is the unit of account. Here again, this basically means that the currency provides a common measure of the value of goods and services being exchanged. And that is kind of true at a point in time, but the volatility of Bitcoin, here again, I mean, it basically failed. For example, let's think about if you'd have bought an iPhone in January for $500 or 38 Bitcoins, and then sold it in December for $700 or 0.7 Bitcoin. Under a US dollar book of accounts, you'd show a $200 profit, but under Bitcoin, you would show a 37 Bitcoin loss. So, based on the foregoing overview, I mean, I find it very hard to see Bitcoin being much of a pretender to the throne of the anytime soon, that'll disappoint some owners, but on the other hand, it's good in that it probably mitigates some of the risks of government trying to legislate it out of existence.
So, Stephen, how should we think about the value of a Bitcoin?
Another good question, and this is a bit of a philosopher's stone, but in the short run, it's basically, it's pure supply and demand. More buyers than sellers and the price goes up. And complicating that is the fact that 60 or 70% of them basically aren't on the market. Different approaches that people have tried to use. Some hardy souls try and tie it to the cost of producing new Bitcoins. There's a process called mining. Basically that involves being the first to solve a complex mathematical puzzle, the solution to which validates the current batch of outstanding transactions. Over time, this becomes more difficult to adopt to the amount of computing power being dedicated to mining for Bitcoin. So in the early days, anyone with a home PC could get a nice little holding of Bitcoin. So if anyone has a son who graduated in computer science in about 2010, you might want to stay on their good side because they could very well be Bitcoin millionaires. But now, unfortunately, the required computing power is such that you need very specialized gear to do this. So unless your spouse would be happy with you installing something like this in your basement, it's not really an option for any of us. Another technique is to try and relate it to the value of something else, for example, gold. The argument here basically goes there are 35,000 tons of gold held for investment purposes in the world. If only 1% of the money would flow, this money would flow into Bitcoin as a substitute, it would imply a value per coin of about $1,000. But the problem here is, the percentages are totally arbitrary. You pick whatever number you want to come out with, and you pick that percentage accordingly. So basically, our basic opinion is that there's not a tremendous amount of value in a Bitcoin per se because of what we were talking about in its characteristics to money. But we do think there's economic value in the possibilities offered by the network in terms of saving costs. Our opinion is basically the way to think it through is the value of a Bitcoin is tied to the acceptance of uses of Bitcoin to make financial transactions. So the idea doesn't take off, they're basically worthless. But given that Bitcoins are needed to transact on the network and the supply at any point in time is limited, if the idea does give broader assistance, then the price of the Bitcoin will be a function of the total value of transactions being carried out in Bitcoin. The challenge is that at any stage, estimating this is just guesswork, and that's another factor explaining the volatility in the price.
Stephen, what are the main impediments to wider acceptance of Bitcoin? So might we see it available to buy lottery tickets in suburban Illinois or suburban Toronto?
Yeah. Well, there are several really, but at the same time, a lot of the current and valid objections I think will be addressed over time by innovation. So the purpose of this call, I want to address three in particular. One obvious risk to any technology development is that of being superseded by another better rival. Basically, the disruptor can get disrupted. If you think back in the mid-90s, Netscape had a 90% share of the browser market. Then Microsoft launched Internet Explorer, and Netscape was eventually never heard from again. A closer to home example is BlackBerry's relegation to an also ran by Apple and Google. So Bitcoin certainly spawned its fair as a last coin. Although there's only probably really until someone comes up with something that's mostly better, points first for status will give it the obvious choice. One criticism of Bitcoin is that it takes at least 10 minutes to settle a transaction, which is fine for an online purchase, but not so good for buying your morning coffee in Starbucks. So there's one area that if someone comes up with an innovation that addresses that issue, that's something that could potentially leapfrog Bitcoin. Now, the Bitcoin system itself evolves over time, so it could be that Bitcoin will improve its underlying mechanisms to address that. I think the important thing is, in my mind, the real thing that's going on here is low-cost money transfer. So, unless you're sitting as a big holder of Bitcoins and have that vested interest, that's the proliferation of that, the real point. It's not just the success of Bitcoin per se. Personally, I think things will evolve so the mechanism of Bitcoin will be reserved, but transactions will take place in a conventional currency. The second obvious concern is the security of your Bitcoins. As I say, they're just digital things that exist in what's called a wallet, which is basically just a computer file. And that can either be on your computer as a hard copy on paper, or else hosted on an online third-party cloud system. So basically, basically problems have occurred where people inadvertently surrender access to their passwords to their accounts to hackers, and that's resulted in the loss of their Bitcoin. Similarly, if you have a computer failure and you haven't backed up your files, that's the end of your Bitcoins too. There's a terrible story about some poor English guy who he threw a hard disk into a landfill, and then about a month or so remembered, I guess he saw something on the news that his hard drive contained the code for about $7 million worth of Bitcoins that he'd acquired for next to nothing about 4 years previously. Some Bitcoin fans will dismiss this concern, saying it's similar to a bank robbery, and bank robberies don't invalidate the underlying currency that was stolen, but that misses the point that this is a valid barrier to acceptance of Bitcoin more generally. Although I think this is an obvious area for some entrepreneur to develop and market some sort of user-friendly solution that addresses these reservations. And the final other potential gorilla in the room, the prospect of government regulation. Financial legislation was written in an age when the prospect of virtual currency was science fiction. And there's actually quite a big legal debate about whether Bitcoin is a currency, a commodity, or an investment, and hence what the appropriate regulatory framework would be. This is a prominent concern of Bitcoin holders. You don't want to be holding one of these things if the government should turn around to say that transacting is illegal. Another legal concern is the potential for the anonymity of the Bitcoin system we put to use to facilitate laundering, drug trafficking, other illicit activities. The U.S. is starting to move in the general direction of considering Bitcoin. For example, a Bitcoin exchange where you can buy and sell these things is covered by the same money laundering rules that apply to other financial companies. For example, transactions above $10,000 have to be reported. If you go to open a Bitcoin account on one of the big exchanges, you've got to supply them with a copy of your passport and proof of address. So my opinion, basically, I don't see Bitcoin ever really becoming big enough to ban it. U.S. is a $16 trillion economy. Total value of Bitcoins is something like $12 billion, which is a little more than the market, a little less than the market cap of Alcoa. And actually, recent Senate hearings have actually been, if anything, constructive in nature. Government policy can obviously be pretty capricious. So my opinion is any legislation probably would be more concerned with consumer protection than anything else. But certainly, legal certainty would be beneficial for wider acceptance.
So, Stephen, what are some of the practical implications for us here at Toron AMI and our day-to-day investment activities?
Yeah, good question. So Bitcoin, tying back to the start, it certainly has the potential to be a disruptive technology, most obviously in the payment system that will create challenges and opportunities. Companies that could be challenged are payment processors such as Visa and MasterCard and money transfer agents such as Western Union. At the same time, it creates opportunities. For example, if a company could get just 1% of the revenues of Visa and MasterCard through offering some ancillary service that people value at a lower commission rate, that could easily support a $1 billion plus business. The ability to escape card fees of approximately 3% per transaction. That's a big benefit for small businesses, especially if you're a high volume, low margin type thing such as retail. At the same time, I think a bank that embraces Bitcoin and develops a compelling for their customers could take share from a bank that ignores it. As previously mentioned, the mining activities used to create Bitcoin has created a mini technology arms race, and that's already produced new developments in, for example, cooling technology, which is presumably of transferability to a wider customer base. The ultimate fate of Bitcoin still waits to be seen at the end of the day, but we'll certainly be attempting to gauge the awareness management has of both threats and opportunities posed to the businesses and companies that we currently invest in or potentially could in the future. So the basic conclusion is that it's really important for us as investors to proactively consider the impacts, positive and negative, of new technologies for the companies we follow, and be able to react, particularly before the potential becomes a reality. As for Bitcoin itself, it's an interesting experiment. It creates a methodology to conduct a secure financial transaction while dispensing with the traditional middleman. And that's the key point in our opinion. The fact that transactions are denominated in Bitcoins is kind of secondary in nature. Sure, there's several barriers to widespread adoption, but it's not that different to many new technologies. And one good thing about where we live in is that there are a lot of motivated and talented people around who will try and surmount the jobs to go. And I, for one, will be watching the ultimate fate of Bitcoin with a lot of interest and an open mind. Anyway, with that, I'll hand things back to Jimmy.
Just to open it up for questions, I'll give a couple secs and we'll call out anybody who's got their hand raised on the system. Or you can press *2 on the phone, and I'll call out the last 4 digits.
While we're waiting for some audience questions, Stephen, I've got one for you.
Yep.
I'm curious, you mentioned earlier the credit card companies and Western Union or the remittance companies. If I had to put you on the spot, what do you think this means in the short to midterm for those particular companies?
Well, here's the way I think it's true, right? Look at Visa. Visa's at 30 times earnings and expected to grow at 15% per year. So if these transaction-type mechanisms, exemplified by Bitcoin, but potentially other ones, can start to erode that growth rate, there's going to be a lot of downside in that stock. If the multiple if the growth rate goes from 15% to 12%, does the stock go from 30 times earnings to 20 times earnings? There's a lot of downside there. You know, it seems inconceivable right now that this is going to be the death knell of these companies, and I think things will coexist. Think about voice over IP. That's impacted the telcos business, but the telcos are still there. So, I mean, it's inconceivable. I find it kind of inconceivable right now that it's going to be the death knell for Visa, but then again, you know, think back to the original 4 quotes, right? Those people didn't think that it was the new technologies they were commenting on were going to have anywhere near the sort of impact that they actually turned out to. What will be interesting is to see how Visa and people like that react if we do actually see this stuff gain some sort of traction. That's what I'm interested in. I mean, right now it's too out there to be an investment issue, but that can change very rapidly.
So, Stephen, one thing I know that you and I talked about beforehand was the idea that it's not actually the Bitcoin itself that might be the changer. It's the technology that allows Bitcoin to exist that might be the changer.
Yep.
Maybe you can tell us a little bit more about that.
Yeah, I mean, I think the important thing to remember is there's no Bitcoin corporation out there. In fact, any of the underlying process by which Bitcoin works isn't proprietary to anyone. So anybody can basically implement the same underlying algorithms and methodology to make the transfer. Now, I think, you know, Bitcoin's a neat idea. It's the first to bring this to a wider audience. Ultimately, I find it seems a bit too out there, really, to drive widespread acceptance. But I'm just really intrigued by what the direction that someone like J.P. Morgan can take this in. You know, can they produce a virtual coin card, a virtual currency card that actually transacts in dollars, it works like your credit card, but it doesn't go through the Visa network? I think those are going to be the most interesting developments that we're going to see coming out over the next 3 to 4 years. Because I think that's the kind of thing that's going to really drive the widespread development. I could be wrong, and people will put skins on top of Bitcoin. Think like Skype has popularized voice over IP type telephony. But that's the most interesting thing that I see happening.
So with that, I'm just going to close off the call and pass it over to James with some closing remarks.
Yeah, thanks to our audience for joining us today. And Stephen, thank you very much for sharing your thoughts with us. To everybody out there, please watch for an invitation